Oh, thank you.
Good morning, everybody. Welcome back to the Opportunistic Trader. It's 10 a.m. on November 28th, and we're joined by Phil Flynn of the Price Futures Group and Fox Business Contributor. Phil is going to join us as he regularly does, talk energy, macro, and then today we have the DOE figures coming up in about half an hour. How's it going, Phil?
I'm doing great. I'm doing good. I mean, we're still oil's still acting like a wounded puppy today, isn't it? It's having a hard
Wounded
time.
puppy.
Yeah,
Yes. I mean,
yeah,
we're not too
it
far off
is.
the lows of the year. Before we get into that, real quick, we do have the housing numbers that just came out. We're expecting new home sales of 575,000. They came in at 544,000. So definitely a disappointment there. S&P doesn't seem to mind, but and fixed income really unchanged as well. Actually, the 10-year is one tick off the low. I think the focus is really on Powell coming up at 12 o'clock and then China G20 on Friday. Not so much of these data points, but definitely disappointment on the housing market.
Yeah, I would agree with you. And it's kind of funny. Greg Ip did an article about the economy for the Wall Street Journal, and he went through every sector of the economy basically. Went through manufacturing, went through the service sector, and he really did seem to come to this one conclusion: the only soft spot in the U.S. economy right now is housing. And and so one must wonder, is the slowdown in housing indicative of a slowing economy or bigger problems with the economy? Or are we still dealing with the structural issues, from the financial crisis, a few years back? I think a lot of people, uh, even with the rebound in housing, are still underwater in their homes right now. And so we're not seeing the type of activity that you would see in a normal cycle. So I don't think the weakness in housing is necessarily indicative of a weak economy. I think it's just that the housing market has a lot more to go to sort of normalize after the financial crisis. As you know, after the financial crisis, there were cities with empty condominiums all over the place. Houses that weren't undervalued. You had a lot of people, of course, that are still just basically getting the value of their houses up to a certain level. And the other issue that you've had with housing has been taxes in a lot of the states. A lot of the property taxes in Illinois, for example, I have been going higher and higher, as governments, of course, try to make up for all the money they lost during the financial crisis with all the foreclosures and issues. So you got more issues other than raising interest rates with the slowing housing. I think you have other issues as far as taxes and other things that are going. We think over time the housing market's going to do better. It was kind of interesting. Some of the housing stocks have actually done pretty well, so they seem to be prepared to weather some of the slowdown in activity.
Yeah, absolutely. Yeah, and like you said, there are tons of different things. Going over the IP, sorry, could you just go over that again? What were his
Yeah,
findings in terms of, are things strong or
yeah.
weakening? What
Basic.
was he?
His take that the U.S. economy is stronger than it's ever been. If you look at unemployment, you look at rising wages, you look at just about every indicator that he could see, that was showing growth and continued growth. And I mean, we saw that in today's GDP. I mean, we keep talking about the slowing economy. Hey. There are people that told you that we never see a 3.5 GDP in the United States ever again. We kind of just shrug it off like, oh yeah, 3.5 GDP, like it's commonplace. No, that's an incredible freaking achievement. Okay, 3.5 growth. You know, and yeah, I mean, 5 years ago, people said that was impossible. We'd never get to that level. Well, here we are, and we are, like I say, we are at a level. Of course, the stocks have done very well, but and they want more as they always do. But at the same time, it was an incredible number. It shows a very strong economy. And so housing, even though the prices are falling, maybe that's what they need to do to get the market to go up again. There's a lot of inventory on the market right now. I think, this summer, if the economy continues to grow, that will improve over time.
Yeah, and it'll be interesting to see. There are a number of factors, interest rates also being one, and
Mm-hmm.
that'll be something that Powell will talk about, today and then also over the coming weeks. And we have the Fed decision in
Yeah.
mid-December.
Yeah. Yeah. Are
What
you
do,
are you missing Janet Yellen yet?
Well, it's funny with
President Trump.
all of the criticism of exactly. We talked about that
Right.
this morning. Of all his, his latest comment was literally saying, I'm not happy with a single thing that Jay Powell's doing."
Yeah.
That was what I was thinking. He always said
Yeah.
all along was he liked Yellen. He just wanted somebody else. But
Right.
I'm wondering if he thinks something would be different, and I wonder really
Right.
how much different the Fed would be right now if, let's say, Yellen was the president. I'm not so sure how much different it would be.
I don't think it would be that much different, but definitely Janet was viewed as being more dovish, and President Trump roundly criticized her for saying that she was keeping interest rates too low, that she was being too dovish, and she was just a tool for the Obama administration to keep his economy afloat. And help him out by keeping rates low when she should be rising them. And to be honest with you, in a way, I wouldn't criticize him. He was right. If it wasn't for the Fed during the Obama year, we would have no economy. Okay, it was the Fed that basically kept the economy going because you had a overzealous regulatory agency during a recession. They were adding a lot of government programs, the biggest government programs ever during a recession. And you were penalizing the people that were actually trying to make the economy grow, like small businesses. You were trying to hurt them. You were trying to put them out of business. You were trying to regulate them out of business. And you saw a situation where small business growth during the last few years of the Obama administration had the worst growth in the history of the country ever. The confidence of small business was down. So there was no reason why. That's why you had sub 0.2% growth. You saw immediately after you lifted those regulations, small business confidence went to a historic low, to a historic high overnight. That just didn't happen. It happened because you got the government's boot off their neck, and they were allowed to do their job. And I think that's why that's why the economy is where it is today, this 3.5% growth that, of course, the last administration said we could never get to ever again.
Hmm. So talking about energy here, we're trading
Mm-hmm.
$51. Had a horrible week last week. What are we looking at for data today?
I'll tell you, the numbers that we got from the American Petroleum Institute yesterday weren't very, very bullish. They were actually kind of bearish. And it was kind of interesting to look at the market's reaction after the numbers came out. Instead of breaking after the API reported a 3.453 million barrel increase in crude supply, it actually rallied. And it kind of shows you that maybe from a big picture, some of the selling in the market, the straight sell play could be ending. Doesn't mean that the bottom is in. Though it looks like they're trying to build the bottom at $50. There's a lot of reasons fundamentally why $50 might be a good place to bottom, because we know that that's basically the breaking point for a lot of shale producers. That if we go down below $50 a barrel, that they're going to have to, shut down and they're going to start losing money. I know there's a few that say they can make money at 40 and they're prepared for 40. That's not the bulk of them. Most of them are already losing money, and if it goes below 50, it will be devastating. I would say that if we get below 50 for a sustained period of time, the banks are going to start pulling the loans on a lot of these shale producers. So you're going to probably see a major pullback in new rigs going forward if we get below 50. The only thing that I'm worried about, calling a bottom at 50 is it's almost too convenient. You have this
Right.
major downward sell. 50 seems to be a magic psychological number that everybody's focusing on, and everybody's kind of like, oh, this could be the bottom. But the market is acting, like I said, it's still acting like a wounded puppy. It doesn't look like it's in the mood to bottom. I talked to one long-term energy trader. He goes, you know what I want him to do? I want him to just wash it out, get down to $48, get it over with. Then he would be feeling comfortable buying with both hands. Now, if you look at the monthly charts, you could make a case that this thing could wash out all the way down to $43 a barrel before it bottoms. So I think the $50 a barrel, for all intents and purposes, really the $48 a barrel area, which could be the final washout number. Um, um, that would be a pretty good fundamental case for for a bottom, and I mean, and there's so many things that could make the market bottom here, and I don't want to be too optimistic that it's in yet and call it, though I think it could be. You've got, of course, the OPEC meeting coming up, and in my report today, I kind of went over what the journal put today. If you get a chance to read the journal article about the break-even cost for a lot of these producers right now in OPEC, and the majority of the OPEC countries right now are losing money on every barrel at this price level. I mean, yeah, we can talk about Venezuela. Venezuela, of course, they need $1 million to break even for their budget. Actually, the journal puts it around $216 a barrel. But I mean, you're talking about Nigeria. Nigeria needs $126 a barrel just to meet their budget. They're not going to get it. And we're hearing today that Nigeria is complaining about a production cut. Well, they're not really complaining about a production cut. What they're really saying is, hey, OPEC, we don't want to cut production because we need the cash desperately because we're losing our backside on oil prices. We talk about Libya. Libya is still unstable. Their break-even point is about $114 a barrel. Okay, so these are all guys that are going to be in on this decision to cut production. Bahrain needs $111. Saudi Arabia, you think they're in good shape? Their budget, unbelievably, they need $88 to make their budget. So in other words, they're going to have to start selling some of their Mercedes, and the prince is going to have to shake down a few other princes to get some money. But they're losing, and this is based on Brent, by the way. So they're $18 under their break-even area. Now out of the biggest oil producers, the person that you could argue that's in the best shape is Russia right now. Russia kind of holds all the cards here because their break-even point's $55 a barrel. So going into this meeting, they can use their influence with Saudi Arabia and say, hey guys, we can sustain these prices longer than you can, so they're going to have, that's why I think Russia's kind of playing hard to get, with the cartel, I don't think it's time to make a decision just yet, mainly because they have that $5 window where they can squeeze out a little market share from Saudi Arabia. But at the end of the day, I think they realize that, with Brent sub 60, they're not that far away from their break-even point. And if they decide not to go along with a major production cut, they are going to be below their break-even point, because that could crash the market, and that could really hurt them. So we're at a very critical juncture. I think the tale of the tape is going to be told in the next 2 weeks, with the OPEC meeting, G20, of course, what the Fed's going to do. So you have a lot of major issues here. The one thing that we do know, the market's going to do what it's going to do. We might really have a washout. We might bottom here. I think we have a chance of bottom here. I'd feel more comfortable if we washed out to 48 and then came back up. But the one thing we do know is that these prices are not going to be sustainable if they get any lower from a production viewpoint, because we know that the U.S. producers are going to have to start cutting back. They're probably cutting back already. You're probably not seeing it in the numbers because you're hearing, U.S. production record high. Oh, guess what? Boy, at this pace, we're going to be producing, 13 million barrels. Hey, don't believe it. You can't believe it, because what's going to happen is there's a lag time. The production that you're seeing going in really was put in place 30 to 90 days ago when oil prices were $70 a barrel. And yeah, they'll be happy to add production at $70 a barrel, but they better darn well have hedged it, because, now at $50 a barrel, you're not going to see the same momentum for these producers. Even in the Permian Basin and some of these hot spots, they're not going to be adding rigs at this point. So you're going to see a pullback. It's already underway. You're just not going to see it in the numbers for a few months.
So on the short term, for today, on the data, do you get the sense with the aggressive price action that we've seen over the past few weeks that whether the data comes out, big build, big draw, that we're going to be moving off of that 2 hours from now? Or do you think that it's more the forces that be that we've been seeing recently, the trend and kind of the pressure that's been there?
I think the data's big. I do. I think it could change the mood, because we are trying to bottom here. If we do get a surprise drawdown in crude and products, it could be a wake-up call, but it would have to be a pretty big build, okay? Because then I think the fundamentals could overcome the worries about OPEC next week. It could overcome the Fed worries. The market could actually break the sharp downtrend line if we get a real bullish report, but it's going to have to be real bullish. You're right. More than likely, probably what's going to happen is we're going to get a range-bound report. It's going to be a little bullish, a little bearish. If it's a little bearish, it's going to test the low. May try to, if they get some momentum going, then we'll be looking at the outside markets. Is the stock market selling off? Are we getting any comments? Then we could get that washout down the 48. So we'd be looking at the outside markets. But if we don't get the outside news, then you're right. If we get a bearish report, we'll probably go down and test 50 again and bounce off it and just screw around here, try to rally a little bit and do what we did yesterday, which is basically close back to even on the day,
Well, I'm going to jump back to our first discussion. And what I'm saying is a real headline. It's not from The Onion. This is a real headline. The CNBC is saying that Trump might have renominated Yellen for Fed chair if she wasn't so short.
Oh, gee,
so the Washington Post is saying, and this is once again, this is legitimate from the Washington Post and CNBC here saying that if she was only a few inches taller, Washington Post reporter quoted the current and former officials saying that Trump on multiple occasions discussed giving Yellen another term as central bank, but was concerned over her height.
No kidding, her height. Well, she can wear heels.
I guess that's a mistake. She didn't wear heels.
There she goes. She had heels. There you go.
The report is saying that the National Economic Council members noted that Yellen impressed Trump greatly during the interview, but he said the height thing. So
really, who knows?
So
well, you know what?
If he's that displeased with Powell right now.
Well, there was an old thing, and I don't know if it's still true, but that most of the people that were elected presidents had a height advantage on their opponent. So, and I think if you go back over history, like, Abraham Lincoln, hello, right there. But I mean, most of the people, like if you were voting and you wanted to bet who was going to win, you'd go by their heights. Whoever was taller would win. So it worked with Trump, Hillary. Donald was taller than Hillary, so he had to win. So it's kind of an interesting thing that height can have an influence on people. I don't know, how scientific it is, but it just happens to be true.
You're a pretty tall guy, Phil. How tall are you?
There you go. I'm about 6'2"-ish, maybe 6'3". I think I'm shrinking. I don't know. I used to be taller, or maybe I used to wear taller shoes. I'm not sure.
All right. Well, thanks for the info. We got the DOE figures in 12 minutes. We'll keep a close eye on that. We appreciate the information. As always, Phil Flynn, Fox Business contributor and Price Futures Group. We'll talk to you later, Phil.
Bye-bye.